What's going on, everybody? Today, I want to talk to you about investing, and hopefully, you are investing. And if you're not, why not? Why you're not putting money to work? Why are you letting your money sit on the sidelines? Why are you letting somebody else take over your money and make those decisions for you? I want you to learn and be comfortable with dealing with your own money. You telling it what to do, not letting it tell you what to do. So today I wanted to show you a little bit of how I do my investing. It's mainly done in my IRAs, my Roth IRAs to be specifically, me and my wife's. I also encourage others that I know to invest in the same way I do. I do not give them this advice as a professional because I am not a professional. I am just an amateur guy that just learns a lot, grows a lot, and would like to see money grow, my money, your money, everybody's money. So I'd like to dig in a little bit today and show you what I invest in and kind of go over why I do so in the way that I do. Now, I have many different accounts, Roth IRAs, traditional IRAs, 401k with my work. I have brokerage accounts. I have the 529s for the kids. But today we're going to go over the IRAs, specifically the Roth IRAs, and let you know what I have in them and why I do it. So let's get started. I like to do it a little bit different. I like to put the money to work myself. So what we do is we have automatic withdrawals out of our checking account that goes directly into our Roth IRAs every single paycheck. That way it's never missed. It's there for days like this. So we've essentially have had this small little war chest building up over the months and months and months. And what I would do is I would find really hard days of the red and I would buy. So for example, if you were to look back at right back here. So July, going into August of 19, we were sitting at, what was that, 302? Well, this thing dipped down hard into the 280s. Did a little bit of zigzagging right here and broke right back out. So up until July, so pretty much from early June to July, saving the money of our paychecks, this little drop hit. We started getting in on this downswing. I'm not sure exactly when we're buying in because I buy whatever I can afford at the time. Usually I do it in sections or tranches. So I will only do maybe a third of what we have in there. So right about here, I buy a third. A day or two later, if it's still dropping harder, buy another third. Coming back up, I didn't do nothing. Dropped again. I bought me the remainder third. And then I start building it back up. So granted, this came back up, this came back down. We didn't have any money at that time to put in there. So we wait until we build up more money, which would have been these following months. So right here you would have September. So we would have built up around 2 months worth of money. The market fell from 300 down to 290. So around 294, 295. I believe we did half. Waited again. Came back up again, fell back down, did another half. So now we had that whole 2 months put to work. Now, as you can see, for the remainder of this period, we did not, I believe, do anything but accumulate funds. So right here on December of 19, everybody thought it might repeat like it did in 2018. That's kind of why I've been always saving the money up for those type of days, because back in 18, made quite a bit of money putting it back into the market when I had my money out. Nothing really happened. So we waited and we waited and we waited. Come up right here to January 24th. Had a small little dip. Bought a small piece right here because it didn't fall too much. Market came back up. And then what did it do back in February going into March? It came down. So you can only guess what I did with the remaining funds we had in our Roths. Bought on the way down. Bought on the way down. Stopped. Came back up a little bit. Didn't do any buying then. But then we had an immediate downturn. So somewhere right about here in the 290s, 280s, start buying again. And the reason I do this is I believe that the U.S. economy will continue to grow throughout my lifetime. I'm not looking at the short term. I'm looking at the long term for this. This is not a turnaround play for me. This is not day trading. This is not swing trading. This isn't even playing with options right now. I do some of those things occasionally, but for these accounts, these are my long-term growth and hold accounts. So I don't like to play those games with my money. I believe it will grow in time as long as I'm in the market. So in this aspect, I'm not doing any timing of the market. I'm focused on time in the market. So with that being said, of how I do my dollar cost averaging, so to speak, there are 3 plays that we do this in all of our Roths. I will go in and I will look at IUSG. I should mention that our Roth accounts are through Fidelity. So I tried to, at the time, look for sole iShare or Fidelity type ETFs with very low cost fees that cover the majority of the companies that I wanted. So all of our money in our Roths are in ETFs. And if you go down here at the bottom, you see that the majority of the weight of the top 10 holdings, this is what I look at because this is going to be your big movements. You could have 20, 30, 40, 50, 100 stocks inside the ETF. I'm more concerned about who are my heavyweight hitters, who really can move this. That's where I believe it's Microsoft, it's Apple, it's Amazon, it's Facebook. You got Google, Visa, MasterCard, Netflix, and Nvidia. Now, in other accounts, I do own several of these companies individually. But here, I like these companies that much, and I'm more focused on tech. Tech, I believe, is going to lead the way for my generation. I'm 36. My wife's 35. I believe this is going to take us for the next 20, 30, 40 years. At least 20 to 30 is going to be in tech. So I like to be heavy in tech, and I also like to be heavy in hard-hitting tech companies. So with the IUSG, it covers these companies. This gives me access to Netflix. It gives me access mainly to Google and Amazon. These stocks are over $1,000 a share, if you did not know that. Don't have that much in there, but I want the exposure to it. So obviously this was the best way I found to get myself some exposure, and it's done pretty well for me. The next one I chose is FTEC. It's a Fidelity Tech ETF, low cost index ETF. This one, you'll see some copies. You'll see some Microsoft, some Apple, some Visa. There's MasterCard, there's Nvidia. But what this also gives you is you get a little Intel, Cisco, Adobe, Salesforce, which I love, and Oracle. So it exposes you to other hard-hitting tech companies. FTEC has been a great performer in my portfolio. It's been amazing. So I have the majority of my portfolio percentage based into FTEC, and I will continue to do so every time we get money put into the account. So say we get $400 into the account. It's a nice red day for all 3 of these ETFs. I'll go ahead and put 200 into FTEC. I'll put 100 into IUSG, and I'll put the final into PEY, which we'll go over right now. PEY I chose because it gives me a little bit more exposure. It gives me Vector Group, Altria, Philip Morris, because they're smokers out there and they pay a really good dividend. AT&T, Duke Energy, IBM, General Mills, Dominion, all these old classic names that pay a hefty dividend. Now, in this market, there are possibilities of dividend cuts. There's possible of dividend suspensions, and there's also the possibility of increasing the dividend with certain companies. I would say like General Mills, selling out of all the products that they make. Philip Morris, Altria with the smokers. I don't think you're going to get them to quit smoking. You might get a good small chunk to start thinking about quitting, but I don't think that's really going to hurt them. Plus, there are also other exposures as well that go with them too. It's not just smoking. AT&T is a strong one. People are going to need to have their cell phone plans. A lot of people have the internet with them. I think, what's it called? AT&T Universe is also a popular product. But these are solid companies. So I choose them because this particular PEY pays a monthly dividend. I believe the last dividend I received was 6 cents. Yeah, as you can see right here, on 4/19 they paid 6 cents. On March 22nd, 6 cents, and that's per share. My cost basis right now for in our portfolio is right around the I believe it's 12.75, which is $12.75 per share. Right now, it's trading at $13.65 a share. So you get 100 shares of this sitting there. Take that decimal, move it over to, you're getting paid $6 a month, basically. And what I like to do is reinvest my dividends. So if it's here, the PEY, if it's the FTEC, if it's the IUSG, those dividends get reinvested every month because I want those to buy those extra little shares. I want it to grow over time. That's my main concern. I also want the growth aspect out of the technology. So it's kind of a double hitter. Obviously, the other two don't pay out as high of a dividend as the PEY, but I've loved these three as my Roth IRA choices, and I don't see it changing anytime soon. One thing you want to do is you do not want to check your portfolio every single day. Whether you're doing ETFs, mutual funds, individual stocks, if you're in for the long term, if you're doing this dollar cost averaging method, if you're buying on the red days, don't constantly look at your portfolio. It's going to make you depressed. It's going to make you sad. You're going to wish you never looked at it. Or you get like I did in the earlier years, and I would refresh it every half hour to an hour just to see where my stocks and stuff were going. And talk about a time waster. You don't want to do that. You definitely want to just kind of set it, forget it. What you could do on certain platforms with Webull, I'm not sure. I know they have alerts. I do have some alerts. I'm starting to play with this program more and more. But with like Fidelity, they have alerts you can set up. So say you want PY, and in this market you want to know every time it goes under $13 a share. You believe that's a fair value for it. So you'll set an alert on your account to hit your email to text you at $13. So that way you don't even have to look at it anymore. If it hits, it hits. If it doesn't, it doesn't. There's ways to set alarms as well for, I believe, for the red days. I personally have not done that because I check every single day because I not only have long-term plays in option like this, I also do some short-term trades. I look at the market every single day that it's open, so I'm always constantly in there. I have my watch list. I know where things kind of float around in price. I know what companies I want at certain prices, so I don't set alerts for much of anything anymore. In the beginning days and stages, I set a lot of alerts, but now you just kind of get in that habit of knowing, and you don't have to worry about it. So I don't worry about it. So yeah, that's about all I got. Hope some of this was information that you can use. I hope this gives you some ideas on what you can do with your money, how you can control your money. Don't be afraid to get into this stuff. This is your money. This is your life. This is your future. You need to know something about it. You need to understand, at least at a bare minimum, where your money is going to work for you, because you're going to need it when that time comes. So I highly suggest you get involved. If you have somebody else involved with your money, in charge of your money, get with them more than once a year. Try to do it every quarter if you can. Get to know where your money is going. Say you don't like Philip Morris. You don't like smokers. You don't like companies that promote smoking. You don't want PEY in your portfolio then, because they have that in there. Find something else to put your money into. That's likewise. You can find ETFs that have the same companies without the smokers involved. There's tons of them out there. You just have to do the research and find them. Or whoever's in control of your money, have them find it. In the end, it's up to you. Do what you want to do. I'm just trying to help you, try and give you my perspective. Again, this is what I do. I am not a professional investor. I am an amateur investor. I am not a millionaire. I am a thousandaire. You got to start somewhere. You got to get on it. You got to figure this shit out, because it's not easy, but you can figure it out. If I can, you can. So best of luck to you in your journey. If you like this video, please hit the like button. Please subscribe to the channel. I'm going to try to get videos out at least once every 2 weeks. It may be less, it may be slightly more if we ever get back to sports with the kids. So who the hell knows? But I hope you enjoyed this video, and I look forward to seeing the next one. Have a good night.